is CJ Investing here. Welcome back to my channel. And before I get into the video, I need y'all to like if y'all enjoy this type of content and subscribe to help me reach my goal of 100 subscribers by the end of December 2023, and to just join the family so we can talk about investing, the best dividend stocks that are on sale and stuff like that, and we can learn and we can grow together. So I just want to say I love and I appreciate each and every one of y'all. Let's get into the video. So today I just want to talk about the stock market, just basically like an update of what I'm doing. And I try to do this on a weekly basis. That's normally the goal. But within the past week, I haven't really purchased too much other than Qualcomm. I bought it when it went way down. I think its 52-week low is $101, something like that. And I bought it at 106. So I think I did pretty good. You know, if you buying it anywhere near there, you know, you're getting a steal in my opinion. And that's something that I always watch. Is Qualcomm came crashing down in its stock price for whatever reason. I think the market, some news was saying that it was falling because I guess fears that it would lose its deal with Apple over the years, you know, because Apple has their chip, the A1 chip, and it's pretty fast, it's pretty efficient that they have in their phones. But that's always been a worry, you know. The market comes up with these stupid reasons why the market is going up or down, when in reality that's probably not the case. You know, market goes up and down depending on how investors feeling about companies, you know, big hedge funds, index funds, you know, stuff like that. What days they choose to buy or sell, you know, and investors are very emotional, which causes there to be a lot of volatility in the market. So just because you see a post saying this is the reason why the market is going up or down doesn't necessarily mean that's the case. It could be something completely different. But, you know, Qualcomm at that price at like 106 or even below 110 is a great deal in my opinion. That's just another cheap stock that y'all need to add to your watch list if you don't already have it, and maybe take a deeper dive to look into. I said I would. I remember saying that I would buy some Qualcomm finally, and I did last week in my Roth IRA portfolio. Because lately, before that, I was buying, what did I buy? I had just started that position in Realty Income, and then I had added it to it afterwards because Realty Income is just at a amazing price. And you gotta believe me when I say, it's at one of the best prices that it's been at since I've been in the stock market. I got in about February 2020 for the whole big market crash. You know what I'm saying? But yeah, it's never really been traded in this price. And the whole real estate sector has been hit very, very hard. So if I was looking for some really great deals in the stock market right now, I would go for the real estate sectors, the REITs, Real Estate Investment Trust. That's what REIT stands for. So I would look at that. So my REITs that I'm looking at right now, so I got Realty Income, which I already own in my Roth, and now I'm looking at ADC, that's a ticker symbol, Agree Realty Capital, I think that's what it's called. But it's a smaller company, but it also pays monthly dividends like Realty Income does, and y'all probably need to check that out, because from what I seen from his financials, it seems like it's a pretty stable company, and there could be some growth. As you know, it's easier to grow a company that's a smaller cap company than it is a larger cap. Not to say there could be growth amongst both, because there will, but it's easier. So go check that out, especially if you like monthly dividends. You get to turn your reinvestment feature on your drip, on your brokerage, and have it drip back into your account. So it's increasing your investment faster, and your investment is compounding faster. So your dollars are just basically going up and up faster than a normal quarterly paying dividend stock. So that's the beauty of investing with the monthly dividend strategy. Currently only have one monthly dividend payer in my portfolio. I plan to add a Green Realty Capital pretty soon. Either that or Target. Now, I've been talking about Target for a while, ticker symbol TGT, because it's been at this superb price in a while. I think the last time I just checked, it was at $122. And you gotta love these prices. Some of the stocks that you always been wanting to own, but couldn't own at the time because they were too expensive in price. Now they're at those prices that we dreamed of, back then. And we gotta take advantage of the opportunity, when we see it. We can't just keep buying stocks strictly just because we love them, or just because another YouTuber says to buy them. It's got to be off your own conviction, off your own research. And you want to buy something cheap. You don't want to buy nothing expensive. That doesn't make sense. When we go to the store, when we go to the supermarket, we want to buy stuff mainly, at least I do, if it's like buy one, get one free, maybe 2 for $5, 2 for $3, something like that. You don't want to buy it at full price, or inflation keeps rising as the price rises. So we don't want to buy it at high prices. We want to buy it at the lowest possible price. So we got to use those same principles in the stock market. And just have the patience and wait till it gets to your buy price, your buy range, and then buy it. It shouldn't be any hesitation. If you have the conviction for it, you'll hold on to it, and you'll buy more even when the stock price goes down. You shouldn't get emotional and sell just because the price went down. You don't follow the crowd. You develop your own strategy, and you do what you do. But like I said, Target, I've been wanting to own. So it'll probably be one of those two, my next position that I start. And what I'm really doing right now is I'm trying to develop great cost bases or cost averages in these companies. I would like to continue to build out positions that I have right now, but I may pause that process to go start a new position in another company, just because it's at a great price. And it's easier to have a great cost average if you're already buying it at a low price, opposed to buying it at a higher price and having to dollar cost average down to get to those prices, because that could take forever. That could take a long time. It's easier to do it this way when the price is actually down. These are the best times to start positions in these companies, not when they're higher priced. So take a look at that. I know y'all know about Target. Y'all shopped there before. And y'all know they have great products. They're not going anywhere for a long time. A beast of a company. Regardless of what you see in the commotion with the news and stuff like that, Target isn't going anywhere. So let's go ahead and get these dividends and buy these companies at these awesome prices while everybody else is selling it. And they're looking at those tech stocks like Microsoft, Apple, Amazon. And not to say that those are bad companies, because I want to own Microsoft, maybe Apple one day, but they got to come down in price. I'm not just buying those at any prices, because I understand from being in the market, I learned some lessons. I'm not buying it anymore like I used to buy, just because just because it's Microsoft, or just because it's this big tech company, just because it was what it was and I used the products. But now I buy based on how cheap it is, based on how close it is to its 52-week low or its all-time low. I'm not just buying just because. And I think you should too, in my opinion. So, I will own those companies one day. And I'm fine with just waiting patiently. I have no problem, because there are hundreds of other deals of great companies in the stock market. There's more than one way to get gains and dividends in the stock market other than just buying the best companies at the most expensive prices. Because you know what you do when you do that? When you buy great companies at expensive prices, you set yourself up for failure whenever there's a big market crash, because those are some of the first stocks to fall. Those are some of the first companies to fall, the very expensive ones. So you want to always be cautious, be wary of that when you're buying. The stocks that are already beat down, like the Target, CVS's, they're not going to be beat down as much when there's a major stock market crash or correction. Now, don't get me wrong, they may be down just like everything else, but they'll be down less than everything else. But that's all I have for y'all today. I appreciate y'all for stopping by, tuning in. I love y'all. Hope y'all keep getting these big dividends, these big gains, because you can have it all. You can have both dividends and gains. You can receive dividends while you're holding the stock. You have to wait to sell to receive your profits from the stock or the revenue. But make sure to like, comment, subscribe, and I'll catch y'all next time. Peace.